All right, good afternoon, everyone. This is Joe Bicella here at Chaiken Analytics, and I'd like to welcome you to our presentation of Spot the Best Stocks for Options and Swing Trading. Our presenter today is Marc Chaikin, founder and CEO of Chaiken Analytics. Now, as a reminder, this webinar is being recorded, and a copy will be sent to everyone who is registered. Throughout Marc's presentation, please submit your questions using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. Now, along with us tonight is President and CEO of Simpler Trading, John Carter. We're very excited to have John join us, who Marc considers to be one of the greatest traders on the planet. Over the past year, Marc and John have established a great relationship given the synergy between Chaiken Analytics and the Ready, Aim, Fire signals. So to get us started, here's John Carter.
Great, thank you very much. And it's definitely a privilege to introduce Marc to you guys tonight if you're not familiar with his work. And one of the things that I've found in trading over the years is that there's always this argument between fundamental analysis and technical analysis. And I am primarily a technical trader, but what I've found is that if I can get, say, a technical buy signal on a stock that actually is fundamentally strong, i.e. increasing earnings quarter over quarter, right? The impact of that buy signal is typically going to be stronger than just with a normal stock. And conversely, if I see a stock that's running into earnings, but fundamentally is showing some warning signs, I'll know, to kind of be careful around that, or to potentially, even take the opposite side of that trade. And so what I like about Marc's software, and Marc will be on here in a second and he'll tell you about it, is that it puts you in a situation where it saves, if you really want to understand what's going on, kind of like under the hood of a company, it can take many, many thousands of hours of research. I don't have that time. I've got 3 kids, I've got cows to feed, and I don't have time to make sure I understand every piece of data that I can about a stock. And so what I do is I'll run my technical scans and say, okay, here's the stocks that came up. Then I can check that against Marc's software and say, okay, great. I've got these 15 setups, but when I cross-reference it with Marc's software, and you'll see what I mean here shortly, I can narrow it down to like the 3 or 4 that I think, based on my trading style, are going to have the biggest bang for the buck. So that's the fun part there. So with that, he has put in decades of work and research to come up with the tools that he has. And with that, it is my pleasure to turn this over to Marc. And Marc, looking forward to your presentation.
Was on mute. Thanks, John, and welcome everybody. There is an enormous synergy between the Chaiken power gauge rating and what John Carter does in the Simpler Trader trading room, as well as the Ready, Aim, Fire signal. So in this evening's webinar, I've created a set of examples that highlight how the Chaiken power gauge rating and our methodology enhances and your conviction level based on the Ready, Aim, Fire signals. John, I think you're really going to enjoy this, and you can chime in at any time. I appreciate the fact that you're going to stay on the webinar. I know it's late. I've already had a nice reheated Italian dinner and a glass of wine, so I hope everybody has similarly fortified themselves, and let's get on with the webinar. Marc Chaikin, 50 years on Wall Street. An old college chum of mine is on the webinar. He's been in John's trading room off and on for the last 5 years. He knows that we've been doing technical analysis for 45 years, because just like John, I started out doing technical analysis. So did my friend Billy, who's down in Houston. But I always used it in conjunction with fundamental analysis. I knew that fundamentals drove the market, but that you needed technicals to stay out of trouble in a bear market or in a correction to help time the re-entry points. Along the way, I headed up the options department at a regional firm called Tucker Anthony and R.L. Day, 22 branch offices in New England, over 250 brokers, tens of thousands of options clients. And I can tell you that 95% of those clients lost money. And part of the reason has become clear in this webinar. We're going to show you what you actually need to have to make money trading options. Along the way, I've been mentored by some of the smartest and most successful institutional investors. Some of them were colleagues of mine at firms like Tucker Anthony and Drexel Burnham. Some of them were clients when we started our own institutional brokerage firm in 1989, based on the Chaiken money flow technical indicators in our Chaiken bands. And the reason that's important is because everything I learned from these institutional investors is embedded in the Chaiken Power Gauge rating. Our model that has 4 primary factors and 20 inputs into those factors, that's really the culmination of my life's work. And as you'll see, fundamentals really do drive the market. And as John said, it's earnings. And we're gonna get to that right now. But before we do, a quick disclaimer: Chaiken Analytics is not registered as a broker-dealer or investment advisor with any U.S. or state regulatory agency. Therefore, everything we're going to talk about on this webinar is for educational purposes only, not meant to be trading recommendations. So please take that seriously and use these as examples to help infuse your trading, make it more profitable going forward. We've been lucky in the 6.5 years since we started Chaiken Analytics to be used by the pros, people like John Carter at Simpler Trading, some of the big hedge funds, Paulson, Soros, Fidelity Investments, and to be quoted in the media. And just this week, for the first time, I was quoted in Forbes in the June 17th issue, which is on the newsstand today, in an article about Mexico entitled "Build the Wall." I was quoted analyzing the Mexican ETF, exchange traded fund, and the 7 stocks that make up 50% of those funds. So we've gotten a lot of validation from the media. It's important because there are a lot of people out there, as John has said, with trading methodologies and fundamental systems. And when you get that validation from the media, you earn it. So in the next 45 minutes, you're going to discover 5 keys to profitable option and swing trading. Fundamental stock rating is your directional edge. That's what you need to trade options successfully. We really key in on how a stock is performing relative to the market. And you'll see why in a couple of minutes. Very important to know what the institutions are doing. That's what Chaiken Money Flow is all about. Now, I imagine many of you have seen Chaiken Money Flow on your online brokerage platforms. It's on every platform, as well as the professional platforms like Reuters and Bloomberg. If you're familiar with Chaiken Money Flow, type a big CMF into the chat box, please, so we know if you've used Chaiken Money Flow or at least are familiar with it. That's very gratifying. I see a lot of people are typing in a CMF. And we're going to teach you how to play good defense, because good defense is the key to preserving assets and actually making money in a bear market or in a correction. And then finally, we're going to end with the most exciting segment of the webinar: how you can profit with options during earnings season. Now, I'd like to start out by asking you a question. Look into your heart and tell me whether politics is getting in the way of your trading. If it is, type a big P in the chat box, please. And I'm seeing a lot of people who are concerned with what's coming out of Washington on a daily basis, almost on an hourly basis. So in my weekly market letter, which comes out every Sunday, this past week, I reviewed 50 years of Wall Street history and keyed in on 5 events that were very unsettling politically that did not lead to a bear market. The only one that did was the Nixon resignation, and we were already in a bear market in 1973 when Nixon got involved with the Watergate scandal and had to resign ahead of an impeachment proceeding. But in 1963, John F. Kennedy was assassinated. That's about as radical as it gets, and the bull market resumed within 2 days. You might think that's callous, but that's how Wall Street works. 1970, Kent State shootings in May. The 2-year bear market ended 1 month later, had no impact. 1986, Iran-Contra, Ronald Reagan, looked like there might be an impeachment proceeding. Ollie North was in the news. Bull market continued till August of '87. 1998, the Starr Commission report and articles of impeachment drawn up against Bill Clinton, then the president. Bull market continued until 2000. And then in 2004, a big scandal over the abuses in the Iraqi prison Abu Ghraib. It embroiled the State Department, the Defense Department, and yet the bull market continued until September of 2007. So the bottom line is political risk doesn't cause bear markets. Here's what does cause bear markets: economic downturns. These two charts, with credit to Bespoke Investment Research, show you the real indicators that predict a recession and therefore a bear market. And they're really easy to understand. Housing starts, 12-month average. This is 57 years of data. Every recession since 1960 has been preceded by a turndown well ahead of the recession in the 12-month average of housing starts. And then, coincident to leading indicators, every recession has been preceded by a sharp turndown in this indicator. This is what predicts bear markets, because recessions typically precede bear markets. And look what these indicators are saying right now. They're all headed up. There's no sign of that kind of decline that precedes a bear market. So what's the bottom line here? Ignore the headlines. Earnings move markets, as John said. Here's another example from the New York Times, March 31st of this year. Caution signals are blinking for the Trump bull market. Well, we all know what's happened since March 31st. The market has moved up to new all-time highs. So please ignore the headlines, follow the signals, whether your signals are technical or fundamental, whether you're listening to Marc Chaikin, Jim Cramer, or hopefully John Carter in the Simpler Trader trading room. What's important is market direction, the trend of corporate earnings, the trend of interest rates, and stock selection. And that's what we're going to be talking about in this webinar. After we get through a little bit of market analysis, we're going to talk about individual stock selection for swing trading and options trading. Now, the most likely scenario for 2017, and we've been singing this song since November election, is a bullish scenario, which is higher interest rates and rising earnings. Now, rising earnings are a fact. First quarter earnings reports were just killer. 14% year-over-year increase in corporate earnings, helped along by energy stocks, and likely to be repeated again in the second quarter. Now, interest rates are a little bit iffy. They started to rise right after the Trump victory because people were anticipating congressional enactment of the Trump agenda, which would lead to inflation. Sadly, we haven't seen anything out of Washington, so there's gridlock, even though the Republicans control all three branches in Washington. But the scenario of higher interest rates and rising earnings, I believe, is the likely scenario for 2017, and it's a bullish scenario. And in a period of rising interest rates, stock selection works. Active managers, mutual fund managers, do poorly in periods of declining interest rates, but stock selection, active portfolio management is critical in a period of rising interest rates. So let's look at the two primary markets. Here's the TLT, the 20-year Treasury ETF. So in spite of the fact that you're probably reading in the headlines that bond prices are starting to move back up and interest rates have moved back down, the fact is we've been in a trading range since January in terms of bond prices, and this is the inverse to interest rates. So it's still not proven that the Fed is going to go back on their word and not raise interest rates. In fact, the Fed has said we're going to raise interest rates 2 more times in 2017. So even though interest rates have backed down a bit, which is good for housing and the mortgage market, refis, the fact is there's no evidence that bonds are going anywhere. But yet, major endowment funds and pension funds and individuals are overexposed to bonds. Now, how do we know that? Here's the Chaikin money flow. Many of you are used to seeing it on stockcharts.com or Thinkorswim, TradeStation. We color it as a red-green indicator. When it's green, it means money is flowing into the TLT, which means they're buying the long-term bond. So people are still buying bonds after a 30-year bull market ended in July back here in the hopes that interest rates are going to drop. And it just flies in the face of everything the Federal Reserve Board has said. On the other hand, if you look at the SPY, the most actively traded instrument in the US markets, the Select Spider ETF for the S&P 500, what do we see? We see a massive uptrend in a channel that's well defined. Now, where would a 5 or 6% correction take us? It would take us down to that lower band. It's happened before. It could happen again, but guess what? For the last 5 months, everybody on CNBC has been predicting a correction or a bear market based on put-call ratios, based on declining breadth, based on valuations. But the reality is, today, the S&P 500 made a new all-time high, in spite of all the naysayers, in spite of all the people on CNBC. So it's our mission as traders to find stocks, to trade on the upside, to take advantage of what is an ongoing bull market, and also know which stocks to avoid. Now, here's one final proof point that to me is the most compelling proof point. This came from Citibank Research. From February of 2016 through the recent peak, we've had a 25% rally in the S&P 500. Now, this chart tells you what typically happens over the last 72 years after a 25% rally. Instinctively, I would have said, well, market's overbought, likely to go down. The reality is totally different. Half the time, 36 out of 72 instances, the market continues up and makes an additional 25% advance. Another 25% of the time, you go up an average of 5%. I think that's probably the environment we're in right now. 5% from 2,400 would take us to our long-standing target of 2,500 on the S&P. Only 25% of the time, after a 25% rally, does the market drop. So if you're looking for a bear market, if you're influenced by the headlines about turmoil in Washington, you're leaning the wrong way. Only 1 out of 4 times would you be right. And actually, in 4 out of those 17 instances, you had a sharp rally before you peaked. So the bottom line that I want to bring to you to set the stage for this webinar is that we're in an uptrend, and you've got to be looking for opportunities to buy, whether you're a swing trader, an options trader, or investing for your 401k plan. Now, just in case I wasn't convincing, here's how you calm your inner fears and protect yourself against the market decline. You do a bearish vertical put spread on the S&P 500. It's a really simple strategy. It comes from our options play module, which is embedded into Chaiken Analytics that we license from Options Play, which has become the de facto standard for probability-based option strategies. And this is a simple way to protect yourself against a 3 to 4% decline between now and June 30th. You buy the 241 put, you sell the 234 put against it, cost you $197 to protect yourself against a 3% market decline. And you can make a very, very nice 200+% return if the market does drop. If you put on this protection, the vertical put spread, as opposed to just buying the put outright, the probabilities are much higher. You can also trade from the long side, knowing that if the market goes against you, that you're going to profit on that put spread. So I'm bullish, been uniformly bullish, looking to buy pullbacks since November. But if you have a different view, this is a wonderful way to implement that view and protect yourself over decline in the market over the next 5 weeks. Now, we found in talking to people on these webinars, clients of ours, subscribers to our software, that the biggest problem that people face, not only in their investing, but in their personal lives, is information overload. Facebook, Snapchat, LinkedIn, Twitter, email, you name it. There's just too much information to process. And the key to making money in the markets is to focus. And when you've got information overload, an inbox that just overwhelms you at the end of a weekend when you've been off the grid, it's very hard to focus and zero in on the opportunities that you need to look at to make money trading. The Chaiken Power Gauge rating, which is our 4-factor 20-input model, cuts through the clutter. It takes all that fundamental data on the right, converts it into a power gauge rating, 4 primary factors, 20 components in those factors, 20 inputs. And I created this slide for a webinar that I did on March 30th. Notice that Lam Research, which we used as our poster child back then for a very bullish stock, was trading at 127.80 with a very bullish rating, traded at 153 today. So up over 20% in 2 months. That's what the power gauge rating can do. So our solution to information overload is Chaiken Analytics for both iPad and desktop, and the examples and the charts that we're going to use come from Chaiken Analytics. Now, because time is our most precious commodity, we've bundled the options play probability-based options ideas module into Chaiken Analytics. Firms like Raymond James, Oppenheimer, Merrill Edge have licensed options play. We've bundled it into Chaiken Analytics. No additional cost, so that you can find options ideas that match the stocks you're looking at, whether they're bullish or bearish. You've already seen one example of that, and we're going to show you another couple of examples along the way. Now, I started out by saying that when I ran the options department at Tucker Anthony, 95% of the options traders lost money in spite of all the good intentions that I had. But the reason they lost money is they didn't understand the importance of what I call the directional edge. They were making wild bets with short duration options due to expire within a week or two, out of the money, with no real understanding of the underlying fundamentals and the direction that the stock was likely to take. At Chaiken, we give you that directional edge by combining our fundamental power gauge rating with technical indicators, just 2 of them, combine that into a quantitative model, provide you with buy and sell signals for better entries and exits. Now, if you're following John Carter's ready, aim, fire signals, you've got the best of the best, as you'll see, because I've annotated almost every chart in this presentation with ready, aim, fire, buy or sell signals to show you the synergy between what John is doing and what we're doing at Chaiken Analytics. So successful trading demands a disciplined methodology. This pyramid encapsulates all that. This is about as simple as you can get. My wife Sandy is using this. She never traded stocks before she came to work with Chaiken Analytics. In 4 years, she's gone from novice to knowledgeable, and she is beating the S&P. My son Eric Chaikin, as I'll show you in our final example, is also using it, and you can use it. These are not professional investors. They're not professional traders. They've got a full-time job at Chaiken Analytics, creating the software and the signals that we're going to be looking at. But the pyramid is so simple. At the top is the Chaiken Power Gauge rating. If you do nothing else but listen to the power gauge rating, you'll improve your win percentage and your profits at the end of the year. We also like to look at industry groups and sectors because that puts the wind at your back. At the bottom of the pyramid, 2 only technical indicators. Chaiken money flow, which many of you, as you've indicated, are familiar with, and Chaiken relative strength. And then right in the middle, the sweet spot are buy and sell signals. Again, if you're using John Carter's signals, you've got the best of the best. If you're using candlestick signals, that works as well, but you need some sort of disciplined exit and entry methodology so that the whole thing works from fundamental to technical to entries. Now, we've identified two patterns that are absolutely critical to identifying stocks to trade from the long or the short side. On the long side, we have a pattern called Chaiken Classic Bulls. We want the power gauge rating, our 4-factor 20 input model, to be bullish. We want the stock to be outperforming the market because there's nothing better than having the market validate your fundamental view. And then we want Chaiken money flow to be strong, indicating that institutions are accumulating the stock. So here's our current example of a classic Chaiken bull. We've used everything from United Health to any number of stocks like Southwest Air and Skyworks over the last 4 years in these webinars, but we've been using applied materials for the last 9 months. Why? Because at the bottom of this chart is the Chaiken power gauge rating displayed as a ribbon that goes from red to yellow to green, depending on whether this 20-factor model is bullish, neutral, or bearish. As you can see, that ribbon is green, which means that the fundamental potential of AMAT, the semiconductor material stock, to outperform the market is strong. Right above that is Chaiken relative strength. We compare AMAT to the S&P 500. In this case, we're using the spider. If it's outperforming the market, it's green. If it's underperforming the market, it's red. Now, you could go to Investors Business Daily and see their numbers from 1 to 99, and you'd get a pretty good read on relative strength. But from my point of view, numbers add to information overload. I like pictures, and I know there's one friend of mine on this webinar who would concur. Now, the power gauge rating is your directional edge. Relative strength tells you what the market thinks. And you want the market to agree with the model, no matter what fundamental criteria you're using. If the market disagrees with you, guess who wins? It's always the market. My old friend Marty Zweig, who sadly died too young, used to say that Mr. Market always wins. He actually had a 2-step methodology for beating the market. Watch the Fed and listen to the market. And that would have served you very well over this 7-year bull market that began in March of 2009. And then finally, we have Chaiken money flow, which fluctuates from red to green normally. But when a stock is under heavy accumulation, you'll very often see a pattern where it gets oversold, as AMAT did, and money flow stays green or positive. This is a powerful technique that we've taught institutional investors for years. And later on the webinar, we're going to share a secret pattern that we call the Chaiken bearish money flow alert. It's probably one of the best sell signals that I've ever been involved with. We've been teaching institutional investors for 35 years. And then on the chart, we have 2 other proprietary pieces of information. In this case, we have our relative strength buy signal. And these signals tend to last 4 to 8 weeks, so they're great for swing traders. And then we color code the quarterly earnings to reflect whether a company beat estimates or disappointed. This is really important, as you'll see when we share the components of the power gauge rating with you. Now, this wonderful star that looks like, I guess, Grauman's Chinese Theater in Hollywood shows you where a ready, aim, fire signal occurred. In this case, it's green and under the price, and that's a ready, aim, fire buy signal in April, roughly the same day that our relative strength signal triggered in. So there's a great synergy between what John Carter has created and his team and Chaiken Analytics. So when the power gauge rating supports a ready, aim, fire buy signal, what does that do for you? It gives you conviction. Conviction is the key to making money in the market. How many times have you sat in a trading room, heard a great signal from John or Henry and said, oh, I don't know. I'm concerned about what's going on in Washington. You don't pull the trigger. If you've got a second methodology that's completely independent of what John's doing, that confirms it, you're much more likely to pull the trigger and get into that trade in 39 on the way to 45. Now, the pattern that these stocks follow adheres very closely to something that a great market strategist, Richard Wycoff, theorized 92 years ago. This is the Wycoff accumulation, breakout, and markup idealized way that stocks move up. Richard Wycoff created this over 90 years ago. Stock goes through a basing phase, breaks out, pulls back. They call that a throwback. Guess what? That's where you're going to get a ready, aim, fire buy signal. You rally up, peak, you get a correction, you're likely to get another ready, aim, fire buy signal or a Chaiken relative strength buy. So remember this pattern when we're looking at bullish stocks. The reason I'm so confident on these webinars talking about our methodology is because unintentionally, what we've created mirrors the Wycoff pattern. And the reason the Wycoff pattern works is that it's based on human nature, and human nature hasn't changed for 100 years. So once you've determined a methodology, you need a way to find the stocks that meet your criteria. Whether you're using Chaikin or O'Neill or John Carter or any other methodology following Warren Buffett or the gurus, you have to have a way to zero in and filter down 5,000 publicly traded stocks to a small number of stocks that you can look at much more closely. We have a screener in Chaiken Analytics, and in this case, I was screening for classic bulls, starting with the Russell 3000, and I added only one other factor, earnings surprise, because as you'll see, that's so critical, especially during earnings season, to making high leveraged options profits with limited risk. So using this very simple screen that keys in on the power gauge rating, money flow, and relative strength in large and mid-cap stocks, I was able to narrow the universe of 3,000 stocks down to 13 possibilities that qualify as a classic Chaiken bull. That's how easy it is to focus yourself on the opportunities. Focus is the key in the age of information overload, and focus leads to conviction. This is a virtuous circle. And if you've read any of Jack Schwager's Market Wizard books, there's a common thread that runs through that. In fact, let me know how many of you have read one of the Market Wizard books by typing a big W in the Q&A box, please. And I see that many of you have. And the common thread that runs between these interviews with successful traders and investors is they have a methodology and they stick to it. They know what they're doing and why they're doing it, and they repeat it over and over and over again. That gives them conviction. They don't get shaken out of a position. They let their rules get them out of it and get them into it. Now, classic Chaiken bear, turn it on its head, 180 degrees. Power gauge rating is bearish. Stock is underperforming the market, and Chaiken money flow is red, not green, indicating that institutions are selling the stock, not buying it. So here's our current poster child for the classic Chaiken bear, Under Armour. Please remember that name because we're going to use it in our most recent innovation that we'll show you at the end of the webinar. But Under Armour is in this very weak apparel group. Although PVH, which has had a bullish Chaiken power gauge rating, reported a positive earnings surprise after the close today. But that's sort of classic jeans, underwear, t-shirts, and so forth. Under Armour is a sexy story stock that captured the imagination of Wall Street. But look what the institutions have been doing since the power gauge turned bearish in July of 2016. They've been selling the stock up until April, any chance they could get. And these red stars are not Donald Trump's contacts with the Russians. These are ready, aim, fire cell signals. And look how timely they were. So again, reinforced by the Chaikin power gauge rating telling you that the fundamentals are bearish, you're going to pull the trigger on that trade. You may even put on a larger position than you might normally put on. And in this case, our relative strength sell signal triggered. Now, I'll tell you what the relative strength sell signal is. I can't tell you what the ready, aim, fire signal is. Relative strength sell signal comes when a stock is underperforming the market, and we know that because the relative strength indicator is red, not green. It rallies above its 21-day average and then drops back below the 21-day average. That triggers the relative strength sell signal. Actually doesn't care whether the power gauge is bullish or neutral. But it helps if the power gauge is bearish because now everything is lighting up. And look how wonderful those put trades were, especially ahead of this earnings report back in January when Under Armour disappointed and the stock dropped from 28 all the way down to 20. These are the trades in earnings season that add up to big, big, big percentage gains. And since that negative earnings report, in spite of a positive earnings surprise 3 weeks ago, the stock has gone nowhere. It's dead money. That's another thing that the power gauge rating does for you. It discourages bottom fishing. I've said for the last 2 years on these webinars that bottom fishing is the most expensive sport in America. Now, maybe horse racing runs a close second, but bottom fishing is bad for your financial health, and the power gauge rating, when it's bearish along with relative strength, will discourage you from listening to the talking heads on CNBC who might be saying, well, Under Armour is going to turn their act around and the company's going to get their act together. Don't believe it. There's no reason to guess in Wall Street. As they used to say in New York, where I lived for 30 years, we're now in Philadelphia, never run for a bus. There's going to be another one that's going to come along in a couple of minutes. Same in the stock market, as we'll see. So it's all about the Chaikin power gauge rating. It's a simple display that goes from very bearish to very bullish. It looks like the gas gauge on your car, and it can be your GPS during earnings season. But there's a lot going on under the surface. There's much more there than meets the eye. And guess who figured that out? My friend John Carter. About a year ago, John got exposed to the Chaikin power gauge rating through one of his marketing people. He looked at it very deeply, evaluated it relative to the technical work that he was doing, and gave us this wonderful testimonial ahead of the first webinar we did with John last August. An objective, awesome meter for stocks. There's a lot of hyped up tools there, but when I find something interesting, I'll let you know about it. So you can imagine that a single tool that combines 20 plus technical and fundamental factors to anticipate a stock's potential got my attention. It's called the Chaikin power gauge reading. And at first glance, I thought this looked like an objective, awesome meter for stocks. I like that it incorporates fundamentals and technicals. So what were those 20 factors that got John so excited? Well, here's the 4 primary factors. We're changing the terminology. We used to call them components, but they're really the primary factors. What we used to call financials, we're going to rename value. What we called earnings, we're going to rename growth. Technicals are very easy to understand. What we called experts and expert opinions, we're going to now rename sentiment. Each of those 4 primary factors has 5 inputs. They're all weighted differently. The fundamentals, the value metrics are 35% of the model. This is what a Warren Buffett or a Seth Klarman looks at now. Many of you didn't know Seth Klarman until this weekend when his horse won the Preakness. But Seth Klarman is one of the great value investors over the last 35 years, probably more successful than Warren Buffett because he didn't have a big insurance company funding his equity investments. These are the factors that value investors look at. They're the bedrock of the model. The growth factors, believe it or not, earnings consistency is probably the most important growth factor, because it's not big jumps in earnings, it's consistent earnings year over year over year. Companies like Johnson & Johnson and Pfizer and Merck, the companies that are mundane but keep growing year over year and raise their dividends, these are the stocks that outperform over the long term. And they also, at times, represent good trading opportunities. But there are two inputs that I'd like to key in on: earnings surprise and industry group relative strength. Now, I mentioned that I was mentored along the way, and one of my mentors was George Douglas at a firm called Drexel Burnham, which had a very ignominious demise in the late 80s after I left. George had one of the first quantitative databases on Wall Street, and he did the original research in earnings surprise and earnings estimate revision. And George taught me two really critical things that are embedded in the Chaiken Power Gauge rating. And by the way, 30 years later, 35 years later, he's still running $8 billion of quant money in Santa Monica. Had the good sense to move from New York City to Santa Monica, still doing the same thing. What George taught me was that earnings surprises come in bunches. There's never just one of them. They're sort of like cockroaches. And that earnings surprises lead to earnings estimate revisions. Wall Street analysts are very sensitive to whether a company reports better than expected or disappointing earnings. So that when a company like a Lam Research or an AMAT reports better than expected earnings, analysts start raising their estimates. And it's been proven by academic studies that earnings estimate revisions are the single biggest driver of short-term stock price movements. So you're combining value metrics, which are the bedrock of the model, with sentiment metrics that are much more sensitive to what analysts, the smartest people on Wall Street, short sellers, insiders, are doing and saying. And then finally, highlighting industry group relative strength, because industry group trends are very powerful. Someone once did an analysis, I think it's 45 years ago, 60% of a stock's price movement can be traced to the market, 20 to 25% to the industry group it's in, and only 15% to the individual stock itself. So it's a herd effect. Now we're going to look at industry group relative strength in a moment. Now here's the performance numbers. In 2016, using the Russell 3000 as our universe, the average very bullish stock, 428 of them at any given point in time, were up 32%. How many of you would have liked to have seen your account go up 32% last year? I know I would have. My wife Sandy's is, but I am running a company, so I'm not trading. The very bearish stocks were up only 9.5%. It's that spread between 32 and 9.5 that the power gauge captures. It's a difference between winning and losing at the end of the year. Because in a year like 2015, even though the market averages, whether you're looking at the Russell 3000 or the S&P 500, were flat, the average very bearish stock in the Chaiken Power Gauge methodology was down over 17%. These were your energy stocks, the fracking stocks like Range Resources, Diamond Offshore, and the drilling business, railroads that move energy around. Small caps in general were down. So it's being able to avoid those stocks in a bearish trend that keeps you out of trouble, puts you on the right side of those trades, so you're looking to buy put options, and really proves how effective the power gauge rating is. Now, one final proof point, and the reason I dwell on this is not to toot my own horn. It's because I want you to come away from this webinar believing that there's a disciplined methodology that takes all this data, big data is the watchword, synthesizes it down to a rating that you can understand to summarize the fundamental potential for a stock. Once you do that, the rest is relatively easy. Go into John Carter's trading room. Listen for the signals from John and Henry and point yourself in the right direction. So we have two partnerships, one with NASDAQ, where we created 3 NASDAQ Chaiken indexes 3 years ago. They're rebalanced once a year. The goal was to establish a track record and then have an ETF, an exchange traded fund creator, license them. And that happened. The largest mutual insurance company in America, New York Life, and their mainstay investment subsidiary has licensed all 3 NASDAQ Chaiken indexes, large cap, small cap, and dividend achiever. And just a week ago, the Index IQ Chaiken small cap ETF was launched by Mainstay. Now, I'm not registered or licensed to promote it, so I'm not suggesting you buy it. It's just another proof point that the largest mutual insurance company in America with a $600 billion investment management subsidiary is willing to stake their reputation, their brand on the Chaiken Power Gauge rating. And hopefully it'll be one of many Power Gauge ETFs. Here's the performance that swayed them. In the 3 years that these indexes have been live, rebalanced just once a year, so they're buy and hold portfolios, the small cap index was up 44% versus the NASDAQ 1500 or the Russell 2000 up 22%, almost a 100% gain versus the benchmark in 3 years. This is what we call adding alpha. If you're an options trader or a swing trader and you're focusing on the very bullish stocks, which is how they get into the NASDAQ Chaiken indexes, you're putting the odds on your side. So now let's get down to the nitty-gritty of how you really spot opportunities. We have a pattern we call personality changes. And spotting personality changes is the key to making and keeping money in the market. Too often, we put our feet in cement and fall in love with the stock or fall out of love with it and don't see the changes that are happening. So here's an example. Anthem Health, which had been a very bullish stock in 2014 and 15 until the election raised some concerns about healthcare and healthcare providers, had a bullish personality change in November. How do we know that? Our relative strength indicator went from red to green at the same time that the power gauge rating turned bullish. The stock broke out of that Wycoff base, and look at the Chaiken money flow. What were the institutions doing in that period between November and January when the stock moved from 130 to 150? They were buying the stock day in and day out so that when you got an oversold condition and a relative strength buy signal, everything was lined up. Then you got a positive earnings surprise, the first one in 3 quarters. You got a ready, aim, fire buy signal here at 160 on the way to 183. And then you got a Chaiken relative strength buy and then another positive earnings surprise. This pattern of positive earnings surprises, outperforming the market, institutional accumulation, and a bullish fundamental rating, along with a signal you can rely on, is how you make money consistently in the market. Is every trade going to work? No. These relative strength signals work 70% of the time. The beauty of them is the duration, 4 to 8 weeks. So if you're truly a swing trader, you can buy these and ride out one trip to the upper band, wait, and sell on that second leg up. Very powerful signals. Now, here's a stock that had a bearish personality change. This is Hertz, the car rental company. And please remember the automobile industry, because we're going to come back to that. Bearish personality change just before the election, negative earnings surprise, big spike down, power gauge is bearish, another negative earnings surprise, ready, aim, fire, sell signal, another bearish earnings surprise. Since you had the bearish personality change, the stock has gone from 25 to 9. This is the power of monitoring relative strength and the fundamentals, and then using the signals to get you into the trade. Now, Warren Buffett has famously said that they don't call balls and strikes on Wall Street. so you don't have to swing at every pitch. You can wait for your pitch. He calls it the fat pitch. I call it the ideal setup. Warren Buffett's hero in life is Ted Williams. Why? Because Ted Williams is the last hitter to bat 400, arguably the best hitter in baseball, unless you're from Cincinnati and you think Pete Rose is. And he only swung at balls that he knew he could hit. Consistency, the fat pitch, the ideal setup. That's what we're really talking about. And the final piece of that is your buy and sell, your exit and entry points. So we've pointed out a variety of signals, our oversold buy, the relative strength buy. You've got John Carter's signals. Any disciplined way of getting into a stock is better than trading on your emotions. But you also have to have a way to find these signals. So in Chaiken Analytics, we help you trade more profitably by highlighting the signals in any list, ETF, or index that you're monitoring in Chaiken. So this is a big list that I follow. And this morning, these were the buy signals on my 130 stocks. Humana triggered a money flow buy signal. It dropped that below a short-term moving average with positive Chaiken money flow, then moved back above it. And the stock was up 1% today. Whether that's the start of a move to big new highs, I can't say, but it certainly was a nice entry. And we help you zero in on them pre-opening so you know what you're doing and why you're doing it. Now, I said in the beginning, at the top of the pyramid, in addition to the power gauge rating, we really like sector and industry group strength to confirm what we're doing on the long side, because it's been proven by white papers from Zacks, Standard & Poor's, Investors Business Daily over the years that if you invest on the long side in strong sectors and strong industry group, you've got a tailwind. On the other hand, if you're going long stocks in weak sectors and weak industry groups, you've got headwinds. Very difficult to make money, but they do lead to short profits if you turn it on its head. And let's look at a couple of examples. We have a unique way of analyzing sectors and industry groups. Instead of looking at price momentum, we look at the number of stocks with bullish versus bearish ratings in any sector or industry group. In this case, on the left, we're looking at the Select Spider sector ETFs, the 10 sectors in the large cap Standard & Poor's 500. This rating we call the Chaiken Power Bar. So right at the top are electric utilities, financial, healthcare, technology, and industrials. All have a better power bar than the S&P, which is even, 93 bullish, 93 bearish. In my opinion, that's one of the reasons that the S&P 500 is having a hard time breaking out above 2,400. There aren't enough bullish stocks. What's dominating the S&P? It's in the news now every day. The FANG stocks are back. And they've added Apple to that, so it's FAANG. But if you look at the power bars, you see the fundamental potential for that sector. We're going to zero in on technology with 21 bullish and 8 bearish, and then energy with only 1 bullish and 19 bearish. But we can get more granular. Go over to the right side. These are industry groups. Standard & Poor's calls them subsectors. Right at the top, number 2, semiconductors. That's part of the technology sector. 12 bullish, 3 bearish. These are large cap names in general. And at the bottom, oil, gas, equipment, and drilling services. 1 bullish, 23 bearish. What does that tell you? Well, we're pointing you in the right direction. I've got a very sensitive mouse here on my Mac. Sorry for that. So let's look at how that points you to profitable opportunities. Here's the XLK, the Select Spider Technology ETF. Notice huge money flow after a little bit of a correction post-election as it broke out to new all-time highs, and very strong relative strength. We don't have a power gauge rating yet for ETFs. We will within 2 months. We've been promising that for about a year. It turns out that power gauge ratings for ETF are sort of like Donald Trump's comment about healthcare. I never realized it would be this difficult. So we don't want to release it till it's right, But when we do, you'll have power gauge ratings for ETFs with predictive value. Now, ironically, you can get a ready, aim, fire signal on an ETF. So back here in April, John Carter's ready, aim, fire signal gave a bullish major fire signal on the technology ETF, encouraging you to look for opportunities in technology stocks. Now, I wanted to go to the XSD, which is the Spider Semiconductor ETF, to try and find some small cap names, because we've already looked at AMAT and we're going to look at Lam Research. We know Google is strong, Apple is strong. Sometimes you can find hidden gems in small caps. So the XSD has a lot of small cap semiconductor stocks. I think Marvel reports earnings tomorrow. Whole series of small cap semiconductor stocks, small and mid. Same pattern though, strong relative strength, strong accumulation, breaking out to new highs. Here are two examples, both of which I made my bullish stocks of the week in April in my weekly market insights. Axcelis, specialized semiconductor technology, power gauge rating's been bullish since mid-July, outperforming the market, strong accumulation, positive earnings surprises. That buy signal is the last piece of the fat pitch, the ideal setup. Warren Buffett would love you if you're buying this stock, even though he claims to not like technology stocks. And lo and behold, after this buy signal, we got a ready, aim, fire buy. And then on this oversold buy in April, I made it my bullish stock of the week. The stock was around 18 and it immediately went to 23. Very powerful stock, very big move. We just recently have another oversold buy signal. Now, all these signals are on our website, fully disclosed in terms of how they're computed. The oversold buy signal requires that the power gauge be bullish. That's the wind at your back. We see that the industry group is strong. That's semiconductors or miscellaneous technology. And the trend is strong. So when you get a signal, whether it's from John Carter or Candlesticks or Chaikin, pull the trigger. I know my wife Sandy did. She bought it at 18 and she sold it at 23. If Sandy can do it, you can do it. She's not a pro. She doesn't do this full time. She does it 15 minutes a day. Second one, Integris, slightly larger cap semiconductor company. Similar pattern. Power gauge is bullish, meaning the fundamentals are there. That's your directional edge. Market agrees with the model because it's outperforming. Institutions are buying it. You've got two ready, aim, fire buy signals. What a wonderful place to get into options trades. And then what we call our money flow buy. And just 2 days ago, Goldman Sachs upgraded Integris and made it one of its priority buys. So if you're following Chaikin, you are way ahead of Goldman Sachs. And this often happens. Wall Street is great. We've got an objective, unbiased model that analyzes the same factors that the Goldman Sachs analysts are looking at, because we capture what they're thinking and doing in our 20 inputs. Now, playing good defense is really important, and we'll see why in a minute. Because playing good defense helps you make money in a bear market. This is the Wycoff distribution pattern, this idealized way that stocks move up and down in a bear market. You get a distribution phase, you break down, you have a throwback rally. That's when you're likely to find a ready, aim, fire, sell signal. The pattern continues. These patterns have been the same for 100 years. So we've been asked, well, we've been in a 7-year bull market. The Chaiken power gauge rating was launched in January of 2011. So it's had the benefit of a bull market. What's going to happen in a bear market? Well, there was a bear market in this period. It was in the energy sector. And here's an example of that. This is a weekly chart, 5 years, of the XLE, the Select Spider Sector Energy ETF. From its peak in August of 2014 at 100, it dropped down to 50. The energy sector dropped 50%. I apologize for this flaky mouse. That's a bear market. And the relative strength turned bearish, bearish personality change. Energy was a sector you needed to avoid on the long side from August of 14, maybe earlier, for things like Transocean, for those of you in Texas who follow the stock, and Diamond Offshore, through the spring of 2015. Big drop. So while the large cap energy stocks were dropping 50%, what was Kinder Morgan doing? Well, Kinder Morgan was a darling of both investment advisors and individual investors because it had a big yield, and they did roll-ups of all their limited partnerships. And at one point, it was yielding 20%. It seduced a lot of people in right at the top at 42. But Kinder Morgan dropped over 75% with relative strength negative and the power gauge bearish. The power gauge discouraged you from buying the stock, and even with the big hedge funds and Warren Buffett accumulating a position, the stock has basically gone nowhere. Now let's look at a one-year chart of Kinder Morgan, which ends in January of 2016. As the stock was dropping from 40 down to 15 on its way to 10, the power gauge turned bearish. You had the bearish personality change, institutional selling, and those wonderful overbought sell signals. The stock makes a new 8-day high with a bearish power gauge rating and gets overbought. I owe this one to Larry Williams, who's been a long-distance mentor of mine for 40 years. It's a really powerful and easy way to identify low-risk entry points. I'm sure that there were ready, aim, fire sell signals. By the way, in stocks with very bearish power gauge ratings and that are underperforming the market, you may have to accept a moderate ready, aim, fire sell signal, not a strong one, because it may not get strong enough to trigger that. So it's similar to selling a stock at its 21-day average instead of waiting for it to get to the upper volatility band. So both the moderate signals and the strong signals, the strong fire signals work. In this case, we were looking at our overbought sell signals. Very powerful way to be on the right side of a stock that's going to underperform. Now, what is energy doing today? Here's the XLE brought up to date. And you can see that we had a bearish personality change back here in late January when the XLE was around 72 on its way to 65. So once you see that relative strength breakdown, you're now looking for opportunities to find put candidates in the energy sector, and you got the perfect combination, the fat pitch, the ideal setup on Schlumberger in April, 2 months after the sector turned bearish. From a relative strength point of view, ahead of earnings when you got a relative strength sell signal. Remember, relative strength is negative. The stock goes above its 21-day average and drops below it. That triggers the signal. It came 5 days ahead of earnings. Earnings were disappointing. The stock dropped from 78 all the way down to 70. We just triggered another sell signal yesterday in the stock. It's an example of how you go from sector to stock to options position to take advantage of a potential waterfall decline during earnings season, because bearish power gauge rated stocks are twice as likely to report a negative earnings surprise. Now we're going to end the webinar with trading profits in earnings season. I think this is really powerful. There's a lot of volatility around earnings reports. They come in January, April, July, and October because most companies report on a calendar year basis. So we just finished first quarter earnings season when Walmart reported last Thursday, a positive earnings surprise, one of the few in the retail sector. And there's a lot of volatility because there's a lot of chatter on the news media, CNBC, the talking heads are all guessing whether a company will beat estimates or disappoint. If you're using the power gauge rating as your GPS during earnings season, you do not have to guess. Not going to be right every time, but when it's right, there are spectacular profits with limited risk to be had using options around earnings reports. Because you'll know with a high degree of reliability whether the stock is likely to meet, beat, or disappoint Wall Street estimates. So let's look at a couple of examples. And I'm going to call something from my weekly market insights on April 9th, which is about 6 weeks ago. Every week I have a bullish or bearish stock of the week. In this case, the auto parts sector, remember back to Hertz, which had that negative personality change. 3 auto parts stocks, all high price stocks with bearish power gauge ratings. And I said, sell these 3 on strength: Advanced Auto Parts, AutoZone, and O'Reilly Automotive. All 3 of them rallied subsequently in the next week. In the case of O'Reilly, you had a negative earnings surprise, and the stock dropped from about 268 all the way down to 240, rallied, and then dropped to new lows today. In the case of AutoZone, yesterday, bearish earnings surprise. The stock dropped over 50 points from I think it was 620 down to 580. And then finally this morning, Advanced Auto Parts reported a negative earnings surprise. The day before, it triggered a ready aim fire sell signal and a Chaiken overbought sell signal. And then this morning, it reported a negative earnings surprise. Yesterday, ahead of the earnings, it was down 5%. Today, it was down an additional 5% on the opening. 10% drop. The signals would have positioned you there. This is the power of a disciplined approach. I'm not a market guru. I'm just putting together all the pieces in a methodical way. Now, there's a pattern on this chart that I alluded to earlier. It's sort of a bonus pattern. We call it the bearish money flow sell alert, and we've been teaching this to institutional investors for 35 years. When a stock makes a new high, particularly near the upper volatility band, money flow should be green or positive, indicating that institutions are contributing to the high. When money flow stays negative below the 0 line and you make or equal an old high, that's a very bearish indication that the institutions are actually taking profits on strength. Public is typically the buyer. There may be a news story. Institutions are selling. We call that a bearish money flow sell alert. It's probably the most powerful sell signal that I've ever been involved with in 50 years on Wall Street. You can spot it on stockcharts.com. You can see it on Chaiken Analytics or on Thinkorswim or any of your other online brokerage platforms. It's a really powerful pattern. And it came at 174. These sell signals came at 150, and they also work. And this indicates another maxim that I want to leave you with. It's never too late to sell a stock which is down when everything is still lined up against it, especially when you get a rally and an opportunity to sell on strength. Now, just as you need to have a way to find classic bulls, to find stocks with signals triggered, you need to be able to monitor earnings reports. So I've excerpted 3 of our earnings calendars from 3 issues of my weekly market insights, which comes out on Sunday. On April 17th, I was watching Lam Research in the strong semiconductor group, which was due to report on April 18th with a bullish rating, and Schlumberger in that weak energy sector with a bearish rating. We've already seen what that did. It spiked down. On the 24th of April, I was looking at O'Reilly Auto in that weak auto group with the bearish rating, and Helmerich & Payne in the weak oil drilling equipment area, also due to report. And this week, I was watching AAP, again, in that weak auto parts group. Remember, group strength accounts for about 20 to 25% of stock price movement. So we've already seen how O'Reilly and AAP did. Here's Lam Research. It had had a bullish earnings surprise back here in February. We recommended a put spread on a webinar. By the time the put spread expired, you had about 175% profit, 156, I think. Another buy signal right ahead of that earnings report, and a ready aim fire buy signal after the earnings report. Positive earnings surprise. The stock spiked up from 126 to 140 and just kept going. 154 today, new all-time high. And this is the put spread that we recommended using options play. Buy the 115 puts, sell the 120 with a March 17th expiration, 4 weeks, and the ability to make a very nice profit on that spread. The profit was there for the taking. Low risk, you know what your risk, it's limited to the cost of the vertical put spread, or the vertical call spread in this case, puts on the downside, calls on the upside. Helmerich and Payne, same thing. Ready, aim, fire, sell signal. Chaiken relative strength, sell signal came about 7 days ahead of earnings, negative earnings surprise, repeating what had happened the previous quarter. Stock spiked down from the point of the sell signal, which was about 78, dropped to 55, 68 rather. Very profitable put trade. And now, to end the webinar, our most exciting new innovation, our stock discovery engine. It's a way to find profitable ideas quickly and methodically, using similar technology to the way Pandora and Spotify find you music, and Netflix finds you movies that you like, and Amazon finds you everything else. So on a webinar that I was doing on March 30th, I seeded the discovery engine with Under Armour, UAA, our classic bear, and it returned 5 stocks that were similar to Under Armour. And I paid particular attention to Lululemon, which was up 4% at that point during the day, because they were due to report earnings after the close on March 30th. Let's see what happened to Lululemon. Even though it rallied 4% into that earnings report, had had a signal ahead of the earnings report, a sell signal, they disappointed and the stock opened down 23%. If you had bought put options the day earnings were due out after the close, imagine the profits you would have had. Do these work every time? Absolutely not. But when they work, these are outsized gains, and you don't have to be right 75% of the time. If you're right 40 to 50% of the time, and you control your losses when you're not right, these are very high risk reward strategies. Now, let's take today's disaster du jour, which is Advanced Auto Parts, which was down 5% on a negative earnings surprise. I put it into the discovery engine, and it gave me 5 stocks that matched up to Advanced Auto Parts. Stocks in the retail group with large cap, bearish earnings estimate trends at or near new lows. And I see AutoZone and Orly, but I also see Macy's, Tractor Supply, and Target, other retailers that we want to avoid. And then if I'm looking for potential swaps, here are some retailers with bullish ratings. One of them, Best Buy, is due to report earnings before the opening tomorrow. It's had a history of 4 straight positive earnings surprises. It's one of the only bricks and mortar retailers that's beating back the Amazon challenge. But Chaiken money flow isn't that great, so I didn't feature it here. Normally I like to feature a stock, go out on a limb. If Best Buy reports a positive earnings surprise, it'll probably spike up to 55. If it doesn't, it may drop 10%. Didn't seem like a good risk-reward ratio, but the stock discovery engine suggested it as a possible alternative to Advanced Auto Parts. Very powerful new discovery engine. We actually won the Benziga FinTech Award for this product a week ago Thursday in New York, beating out 17 other people as best stock ideas platform, tool, or app. Very proud of that particularly for the 26 people in Philadelphia who make up Chaiken Analytics. And I'm going to end the webinar with one last example, and this is near and dear to my heart. This is the Container Store, and the reason I love this is that my son Eric, who's starting to follow the discipline because he's busy designing these products that we're looking at, bought this stock yesterday at $4.05 and sold it this morning on the opening at $5.60. Made a 40% gain overnight because the Container Store reported a positive earnings surprise. But guess what? The Ready Aim Fire signal came 2 days ago at $4.01, ahead of our reversal buy signal. The combination of what John Carter is doing, the recommendations in the trading room, and a fundamental indicator like Chaiken Analytics and our earnings surprise package is lethal. This is the way to put the odds on your side. So Chaiken Analytics, now with the new stock discovery engine, options play, a screener, earnings alerts, news, and intraday charts, is our solution to swing trading and options trading profitably. It normally sells for $1,950 a year for an annual subscription. But because of this wonderful relationship we have with John Carter and the simpler trading community, we're reducing the price as a webinar special to $1,750. And this offer is good until Saturday, May 27th. I know it's Memorial Day weekend. If it takes you a little longer, we'll respect that. Go to chaikenanalytics.com/Carter. The offer will be populated in our shopping cart. Now, in addition to everything you've been seeing on this webinar, and I hope you've come away feeling that you've learned more than you knew when you came into it, we offer small group tutorials to every subscriber to help you get set up and started, to know what the features are and why they're important, what the benefits are to you as a trader. And we also have two other resources, my colleague John Schlitz's daily morning insights, and then Chaiken Market Insights, which is my weekly newsletter where we recommended Integris and Integris, and also those 3 auto stocks to sell. Powerful add-ons to the subscription, come with it, enhance it, show you how we think. Now, as an additional inducement to get you on board, and I've got to tell you, there are over 250 to 300 John Carter community subscribers who are Chaiken Analytics subscribers. So this has really resonated with them. We'll take an additional $100 off the cost of an annual subscription, reducing it to $1,650. And for the first 10 people who call in tonight to subscribe, you'll get a one-on-one phone call with me. They usually last a half hour to 45 minutes. You've got to subscribe by midnight tonight. These are really valuable both for me and for you. I get to know what you're thinking, what your pain points are. We help orient you in the right directions, everything short of making specific recommendations. So again, it's chaikenanalytics.com/Carter. I'd like to thank John and Jared and the whole Carter team for really turning out a big audience for us. And I'll turn it back to John for any closing comments that he might have.
Sure, Mark. And that was, and look, guys, this is the part of the value of this too. And I was just taking notes as I was watching this. And I mean, in trading, you never stop learning, right? And, you know, things that stood out, just like kind of, you know, the bits of wisdom, like with Warren Buffett saying like, hey, you know what, they don't call balls and strikes on Wall Street, so you don't have to swing at everything. You can wait for your pitch. It's so important. We talk about this a lot, and it's one of those things that, you know, it's like constantly reminded of, is that, you know, it's not about like, oh my gosh, you know, the last trade in Tesla really worked out, let's do that again. It's like, no, we're looking for a specific set of criteria. It doesn't matter really what the stock is. That time it happened to be Tesla, that's great. But the next time where kind of that perfect pitch comes down the plate, it may not happen in Tesla for like 3 more months, but, you know, it could happen in a different stock. And so the key is to find those kind of perfect moments in time, those fat pitches down the middle. And you can't do that staring at a 5-minute chart all day, right? And you need to have software like this that can just kind of, you can push a button and it can say, hey, of all the stuff that's out there, here's you ignore the sliders, ignore the curveballs. Here's the big watermelons coming right down the pipe. And so I think the software is fantastic. And Mark, thanks again. And if there's anything else you'd like to add in closing, but yeah, it's great stuff. It's a good testament to your life's work.
Well, thank you, John. It's a pleasure to be partnering with you. As my friend Billy says, if you sit in the Carter trading room all day, you're going to make money day in and day out. So I know from a dear old friend that John is the real deal as a trader, which is what makes me comfortable making these presentations and encouraging John to present to our community, because he really knows what he's doing. And to get his endorsement means an awful lot to me. And I know the synergy of what John's doing and the Chaiken Power Gauge. And Henry, who I guess has become a pretty damn good trader under your tutelage, is also using Chaiken in the trading room, isn't he, John?
Yeah, and we had, it was funny, I think it was like 3 or 4 weeks ago, there was a trade that we were looking at selling some put credit spreads on right before earnings, i.e. a bullish setup. And Henry was hitting me up on Skype. He's like, did you check the software on this? They've got a bearish reading on it. And I was like, oh, and I'm glad we didn't do it, because yeah, it tanked. So it's one of those things where it's kind of part of the daily checklist. Like, all right, are we making sure we're checking, dotting all the I's and crossing all the T's before these earnings plays, especially.
Well, thanks for that validation, John, and we cherish the partnership. For anybody who has any questions, if we haven't answered them, we've got our wholesales and support team in the office. They were treated to a rooftop barbecue in Philadelphia by our sales manager, head of sales, Nick Webb, and they're available at 877-697-6783 to answer any of your questions. But if you want that one-on-one phone call, and again, I love them, subscribe by midnight tonight. The first 10 people who call will get that phone call plus the $1,650 price. I'm usually pretty flexible if there are more than 10, as long as they don't get up to 100, which would swamp me. I'm happy to do it. And now I'm going to turn it back to Joe Bacella, who's going to wrap up the webinar. He's going to put the URL into the chat room so you can click on it and subscribe right now. And Joe will tell you what we're doing in the next 2 days in terms of onboarding sessions.
Excellent.
So thanks again, John, and we look forward to doing it again.
Awesome. Mark, John, thank you so much for the presentation tonight. As Mark just mentioned, first of all, I'm just going to pull up, if you make your way to the chat window, which should be available at the bottom of your page, you will see a direct link, chaikenanalytics.com/Carter is the link to Mark's discount. I'm going to bring up that confirmation page. The discount code will automatically be applied, but as Mark mentioned, tomorrow's going to be a really busy day here at Chaiken Analytics. We are going to hit the ground running tomorrow morning with our pre-market analysis webinar. This is perfect for just getting a sense and a vibe for what is going on in the market, where the strength is, where the weakness is. So a great way to start your day out by finding what opportunities are out there. And as Mark mentioned, more important for each of you is we provide a great amount of support for all of our subscribers, especially newer ones who are just joining the program. We want you to hit the ground running as quickly as possible. So we're actually hosting a special onboard session tomorrow at 2 o'clock Eastern time. This is a session where we're going to cover creating a list, understanding different ways to find ideas, whether it's digging through different sectors, using our discovery engine, as Mark mentioned, which again just received an award at the Benzinga Awards last week, or if it's using our screener. I know there are a lot of questions throughout the webinar regarding what factors can you screen for, including factors such as short interest. All of that is available, and we do a complete walkthrough of what that looks like and how you can use it for a variety of opportunities in Chaiken. But we're going to cover all of this tomorrow. These webinars are for subscribers only, though. And so I think this pairs very nicely with a discounted offer from Marc Chaikin that he's making, $1,650 for a full year to Chaiken Analytics. Again, that number, our support team right now, 877-978-6257. It sounds like a lot of you have already called in, which is great. But we'd love to have you join us. If by any chance tomorrow doesn't work for you, we are recording these webinars, so we'll make sure to make them available, but only if you do take advantage of Marc's discounted offer here. So again, you can make your way to the chat window. The link is available, chaikenanalytics.com/Carter. You can give us a call at 877-697-6783. And again, we would love to have you join us. So on behalf of Marc Chaikin, the entire team here, as well as John Carter, we want to thank you so much for joining us tonight. In the meantime, have a wonderful evening, and we will see you tomorrow morning for our full day of support webinars, pre-market analysis, as well as, of course, our onboard session at 2 o'clock Eastern. Thanks for joining us.